Hey everybody, Day Trader Rockstar here with you, and today's video is a refresher course on the quad rotation. The quad rotation, yes sir. Let me introduce myself. I'm Day Trader Rockstar, John. I trade and run Day Trading Radio, online broadcast of the markets each and every day. We do trading, and it's a great community of traders. I also teach a methodology of trading called the high probability setup methodology. It's based off George Lane's stochastics and divergences and some other indicators. We combine those together, called the HPS, which is the higher probability zones. And, and then there's a lot of things that go into this. I've been trading since 96 full time. And, I started developing the quad rotation method. Well, what you're going to see a little bit about in here, we're going to be talking about the quad rotation. It's an indicator. It's a group of indicators, a group of stochastics. That four different ones. I won't go into detail, but I wanted to make it a little refresher course because so many people have come to the site in search of how to use the quad rotation effectively and stuff, and it's not as easy as just lining it up. As you would, a lot of people just, if you look at our charts and stuff, and if this is familiar to you, it might be. If it's not, then you have to do some catching up. But basically, I'm using four stochastic oscillators here: 9-3, the 14-3, the 44, and the 60-10. And there's a history behind, how I came up with these. The original two is George Lane's stochastics, the 44 and the 60-10. Has their own history behind it also, but it's all math when it comes down to it. And my calculations on how to set these up, just played out perfectly. So we'll see this setup, what I call a quad rotation, when each of the stochastics get down to that 20 line, or a combination of something which I like to call the embedded stochastic or the divergence. Like we actually could start, and there's different type of divergences. So there's a lot to go into the methodology. But it's not complicated. It's a set of rules that you must abide by. If you're not going to, use a set of rules, then there's no sense of you even just stopping here and just trying to even waste your time trying to figure out everything. It's not that hard to figure out. The problem is, and I say this in every one of my videos, the weak link of the whole methodology is the individual trader. Your lack of discipline, your lack of focus, your lack of patience, and there's so many things that me too, and it sounds weird saying it, as a human, as our emotional makeup, how we deal with stress, how we deal with everyday life, how we're dealing with ourselves. There's a lot to go into trading. Trading is a very difficult thing, and it's a casino. It really is. And I always defend trading because I feel you can have an edge in it. You can have an edge in trading, other than buying and investing. What I teach is short term trading. Income trading. That each day you can make some money in the market by trading some of the technicals. All right, and that's where we learned about the stochastics. And what we're doing with stochastics is we're measuring when momentum starts to shift underneath the price of the charts. You're actually seeing maybe the price come down. It's coming down, but you start to see the stochastics moving up. So that divergence tells us that there's a reversal happening. And then the other things that we add to this is our channel lines. And once we have an established channel line, we know what the rule is and what we're looking for during that. So we're looking for a trade inside the channel. And again, these are all rules, and it's all in the playbook. You have access to all this on the site. All right. So actually, another reason I'm doing this, and you can see that video, and I don't want to be too fast. And a lot of people are not familiar with trading terms or trading in general. So this could be way over your head. All right, I offer a lot of beginning courses just for free. You just head over to daytradingradio.com. There's a 10-day free pass. You go to dtr.tv/free. That's dtr.tv/free. It gives you a 10-day pass. Go to the playbooks. All my templates are there, and a lot of the education there. So, but there's, what we look for is the change in price versus stochastics. And it's really the general stochastic divergence that George Lane came up with in the 1950s. But you have to kind of, for this to work, you have to understand market conditions also. That you have to know what type of market conditions you are, because the easy part is identifying, and this is, people might not say this is a divergence. This is an excellent divergence. It's called a closing price divergence. As long as the closing prices, the closing lows, these are the closing lows, if they're all at the same level, like this line right here, and this price came right down to that line, but the stochastics were higher on this, that's a divergence, and that's a very good divergence. All right, and that's something that you will learn over time, how you read price action and what these candles mean. The tails, they don't tell you really what the story is. It could be a bad print down there. It could be one contract there. It doesn't have to have a big weight to it. So you want to really use the closing prices. The closing prices are more of the truthful underlying, what's happening in the markets. So once you see the price comes back down here and it holds that closing price, but it turns higher, that has to trigger in your head. And the higher you see that, you see what we see here? The higher that is on the 14.3 and the 44, these are very good. And this 44, again, there's a lot of hidden gems in trading this methodology. For so many years going over, we've tuned in a indicator to the 44 stochastic, that when it gives us a divergence, and the success rate on this is off the charts. And I'm still very proud to say that I have not seen it break down. Like, there's not many an instant, maybe overnight or something like that. There's no vibe or anything. But if we have a divergence in this, in a 44, it is sure to go hard and fast. And this was actually another one right here. Look at this. 9.3, not a divergence. 14.3, it is a divergence. 44, absolutely a divergence. So these are too big, and that just happens, and you have to take these. And now, the other thing I want to just stress, make sure you're paying attention to. Now, I'm going to go back to this chart here, and I know I'm going to be all over. This is. I just made this up. I said, well, let me go back to this one. Sorry if I'm going to be all over the place. I know it's going to be a disaster. This was back in 2007, 2008, when I was working on the HPS methodology. I wrote out this. This is really old. Stochastics were our foundation. That was what I called the foundation indicator. Everything was based on stochastics. And with the stochastics, we had divergences, we have triple threats. This was really so old. I didn't even have the quad back then. It was a triple, and then I added one more and I made it the quad. So that's kind of a little trivia there. The triple threat. Did I spell threat right? Threats. Maybe I didn't even spell that. Coiled. Hey, I'm not an English teacher, as you can tell in the Alexa, in the Jeopardy app. Basics oversold over. Anyway, stochastics. It's our basic. That's our foundation. Everything based off of stochastics. Price on a confirmed moving average. These are the other indicators that we want to have lining up. And it was called 3 out of 5 indicators would have to be lined up. Stochastics is automatically will be number one. Then we want to have either a price to be on a confirmed trend line, or the price to be on a moving average, or is there a recognizable pattern that we're in? It's very important. We'll talk more about that. Support and are we on support and resistance line? Is there a reversal candle? And I kind of go into just some notes. And this was just something I had out there as one of our basic roadmaps, talking about the methodology in the beginning of it. But it still seems to be very hard for people to comprehend that it's more important to have, like, we also trade what we call a quad rotation. And a quad rotation, and again, you're going to have to catch up on this, or at least track me down if I'm going to catch you up on what a quad rotation is, but I'm going to try my best. So the quad rotation is all four of the stochastics getting oversold again. And when we talk about oversold, we're going to use 20 as our line. Now, you see the four stochastics, they're only showing the D line. So when you look at a typical stochastics, you're going to get two lines, the K, the percentage K, and the percentage D. We don't have to look at the percentage K, so you can make that transparent, All you want to have is the percentage D, or the D line. It's called the signal line. And because we're not, we're doing divergences and coils and stuff, we only need to see the one line. We don't need any other stuff. Whatever makes it clear, and this is very important. So sometimes I'll do this. I'll make a extended line, horizontal line. Oh, I'll just bring it here. Now there's a horizontal line there, and I'm going to make it. If I could do that, I want to make it yellow. And I just, for me, it helps me confirm divergences. So I want to make that yellow. That way I could see if there's something underneath it. Now, for my divergence, my strict divergence, your first low, and when we talk about divergences and price, we're going to be just talking about buy side at this point. We're going to reverse it, but just because these things take too long, we're going to talk about the buy side divergence. All right? That's when the market's pulling back down. And again, why are we looking for divergences? Divergences are pivots. And those are pivots from when the market is moving from one direction to another. And the divergence is usually the change in the direction of the trade. And oops, I'm trying to get that trend line. And you could just when you're pulling back, you're always worried more about the lower trend line. Once you establish a general trend line, you're going to then you're going to take that general trend line, make a parallel trend line, and just put it up at the top of the pivot, the high pivot in between, the two pivots here. That way you have your wider channel here. So as long as you're inside this channel, that trade is a valid trade if it gives you a signal. The object is to get into this inside the channel, because the divergence, which is giving us that higher low right there, that's actually a good divergence. It was a low. Now there's a candle here. Remember, this could trick some people, and it takes time. That candle really doesn't count because we're taking the closing prices. So our closing price is right there, and the closing price is right there. And so it's a lower low on the closing price, and it's a higher low on the stochastics. All right, and it's actually a 5-minute divergence also, because if we come down to this price level down here, from this high to this high, you had a low here, and you had a higher low here. So this is actually a 5-minute. And this is something that, again, it's not that hard to learn. I teach it. What's hard about this is your discipline to be there when it's happening. Now, I'm trying to send out the alerts. I have the Voxer alerts. I tried my best to send these out. That's a great little product. If you want to get the divergence signal sent to you on your phone, it's just $20 a month, or it comes with the membership at Day Trading Radio. If you're a member of Day Trading Radio, you get it automatically. If not, it's on the Patreon. I'll put the link in the bottom. All right, but this is worth money. These divergences, and it's very important that closing low has to be underneath the 20 line or the yellow line. And then the bounce is going to happen, and then you're going to take out the lows. But that taking out the lows, the turn back up has to happen above the 20 line. All right. The higher that, the better. That tends to work out much better than when you have a divergence underneath here. Even though this is a slight divergence right here, if we go back over here and we start to see the price here is just hanging this lower trend line, and we start to see but it's underneath the yellow line. But it is a higher rotation, and it's a lower low on the price, and you could qualify that as a divergence if you wanted to be a mathematical, just do it on the math alone instead of a visual confirmation. That counts. It does count. It is what I call mathematical divergence. So you have this right here, a nice divergence with a closing price, right? You have a nice little, and what we're learning here is that these happen in channels. So the first important thing that we have to learn is how to identify channels. And, that was priced on a confirmed trend line thing. So I've actually updated this, and I said, let's go to this now. We need the quad rotation. What is the quad rotation? The quad rotation is all four stochastics to be oversold. But for the trade, and I didn't even get to this point. This is going to turn into a disaster. Why? Because it's such good information, but I'm all over the place sometimes on it. The the quad rotation is just as all four stochastic getting under that 20 line. And once that happens, that just tells us that we have multiple time frames oversold. Now I'm going to put a line in each time, and we're going to see we're very close probably to a bottom at that point. All right. So we're going to take that vertical line, which is F7, and we're just going to, I want to kind of just put it. Now you see these lines here, this low, this low, this low, and this low. They all have to be underneath the 20 line. They have to be under the 20 line there. Wait, hold on. Why isn't that? What the hell is this? Oh, I guess that's it. All right, so that's what I normally do. Weird. Anyway, hold on. All right, well, I was going to try to just give you this. I don't think I could do that, though, with this charting, the drawing on this chart. So I was just going to put the line there. And you can see the line, that's when it's quad rotation. From that point right here, we did get a nice bounce up. And then if we wait, and again, we're looking at that 20 line. So let's, to make it a little bit easier to read, I think it's important. Horizontal line. Let's put that right here. And then we'll make it yellow too. All right, and basically we want to have it underneath that line. I just prefer yellow. It really stands out with the purple. So only the times we're looking at this is when everything's underneath. So right there, if we put our line, they all have to be. So even if it's above, it doesn't count. They have to be. So you have to line it up right there. That's where it would be, right there, and that's usually right where we take off. So that's a kind of that's a quad rotation, right? No, that wasn't one. That was actually a divergence. But we're just waiting for that, right? Here we go. We're just looking at quad rotations. We're reviewing quad rotations. What's a quad rotation? When all four stochastics get oversold or overbought at the same time. We're not looking at, right now we're concentrating on oversold. So we had a couple overbought here. Here was one up here. And there was one over here. And then there was one here. Look at that. And they all came down hard. So that's a big, I understand why so many people want to trade the quad rotations. And you know what? If you just felt like you needed to trade, you had the quad rotation on your side, you're probably going to do well. That's probably a great sign. So again, I always tell newer traders, I said, half your losses would be eliminated if you just took the trade with the 9-3 stochastics and going in the direction of your trade. It just makes a lot of sense. I mean, you could see how the market moves here. It pulls back, it moves higher, it pulls back, moves higher. We could see here when the stochastics move down, moves higher, move down. This is timed almost perfectly on a shorter time frame. It doesn't make sense to go long when you have a rotation. It doesn't make sense to go long up here. It doesn't make sense to go long up here. Sometimes you do. Sometimes you chase it and then you look back. It's like, why did I just go long there? Over short-term overbought, and you'll drift back down and you get frustrated. So half of your battle is done with, you would be victorious if you could just wait for these divergences, all right, and you could catch them. Like I said, the hard part is, and I don't want to get off the quad rotation thing here. So with the quad rotation, you get down here, and here's another one. So again, you can see 9-3 is chopping around, finally gets under that line, and that 14-3 gets under that line. That's been waiting down there, and this has been waiting down there. So it's right about here. It triggered, and of course, as you can see, a big move up. Now we could do this all day until the market breaks down and is in a downtrend. This is all great in an uptrend. But when you're in a downtrend, and this is something I wanted to kind of talk about today, because the last few days, or at least a couple, Friday, there was a tremendous downward, bias in the market, and so many people are used to the market going up, so you look for the buy side. But there's signals out there that you should look for your short side, and I think we don't use that enough. It's hard sometimes to be perfectly timed with the market. If the market's been going up for 15 days, you don't expect the 16th day to go down, so you're not prepared for it sometimes. But I want to show you some of the things that you should just again put on your rule book. Your rule book is very important, and the rule book is basically, and we got to find it. While we're looking at our four stochastics, our echocardiogram of the market. Remember, everything is starting with the quad rotation. We would like to get a quad rotation down here, but here we have a situation here that we have a quad right there. All right, I would qualify that as a quad. Actually, I would qualify probably right about here. Right about here, there was a quad rotation, and what happened here is the market's kind of moved up a little, up against the 20. We had a little rotation, and then we failed and dropped back down. But this stayed embedded. So this is very important. Very, very important. It has to be a rule. I actually wrote a commandment down, made a new commandment for Day Trading Radio. And and it's not going to be the easiest thing to do. But again, if you surround yourself with enough rules, it'll keep you out of the trade. And that's better than being in the trade 9 times out of 10. So if you start to, so we get a quad rotation, and this is not supposed to be taken, all right. I'm not saying to take this. I'm not saying, but a lot of people are taking a quad rotation. So if you end up taking a quad rotation, you have a chance. You have the opportunity or the chance that this stays down here, and this starts to a downtrending market. At one point, maybe support gives out or a trend gives out, and we break down, and now we're in a downtrend. What's going to happen is your 60-10, your bigger trend is going to be pinned down because the bigger weight is to the downside. These won't rotate up, but the 9-3 will rotate up. So if you start to see the 9-3 rotate back up towards the 80 level, and this is holding underneath the 20 or around the 20, most likely the big trend is going to continue. So it's very important to realize that if you have this scenario, if you're getting that rotation on the 20, it's for some reason you got in here. Maybe you got in right here. Maybe there was a little divergence, which there was right there. Actually, there was a little divergence on that little green candle, and it did move. It went from 22,274 to 22,278. 4 points. All right, not too much. NASDAQ. Anyway, what happened was it did roll over. It did roll over. It had a little bounce, got up to the 20. But I have a rule, and when the rule is if we're trading underneath the 200 period moving average or we're in a confirmed downtrending market, our stochastics are kind of embedded to the downside or having a hard time rotation. It becomes more effective to short all the rotations of the 9-3 up. As long as the price is underneath the 20. If it gets above the 20, then forget about it. But usually, if it's underneath the 20 works really good on this. So if it gets up there, it rotates up there, and we're hanging right around the 20 VWAP, that's where you want to short, right? You see right where that line gets above there? That's where you want to start shorting up here. Most likely, the overall trend is going to be down, and then drops off again. Then you get another rotation, and here it dropped right off against the VWAP. Coming underneath the VWAP. Those are combinations. These are the combinations you like. You like the rotation overbought with a VWAP. It's the same thing that we were looking at. I want to show you some things in a bit. This will probably go for 15 hours, this video. Anyway, once it gets over that 20 line and starts trending up, it's we kind of just go back on waiting for our pattern recognition, which is number one. You got to recognize the patterns, and it might be just saying, all right, I'm just going to throw this in here. I try to keep it on the closing price. See, I could see this all the way up here, and I'll probably I'm just looking at it. I didn't put it up, but I probably see that closing price there, and this is after the fact now. I mean, I'm not doing much on this, but if I was working on that, I would definitely take this one and just extend it all the way down from here to here. Now it popped and came back down and then popped, then hit it again, and then popped, hit it again, and then popped, then hit it again. And it all started here. This was that one tag of it. That's where I started that trend line. So every time it comes down, when we talk about a quad rotation, you should only take a quad rotation. So I'm going to continue with the quad. Let me get my chart up here. With one of these setups, so a quad rotation, all four stochastics has to be oversold. And then the price has to be either on a channel line or a trend line. Now, I used to kind of put these set, like in this original one, I used to have price on a confirmed trend line, and then is there a recognizable pattern? But I combined them. I don't want it to be too complicated. I find people having a hard time. So a trend line and a pattern are basically the same thing. You need to have the trend lines for the patterns to play out. So that could be wedges and channels, 1, 2, 3 patterns. There'll be little lessons on this. So that's why they're kind of channel trend line. It's got 1-2 punch. And it says here, a little note, in a strong downtrend, you must take the profit when the 9-3 gets to 80. So, so we'll talk about that trend line. Like quad rotation, trend line. What does that mean? That means that we have to only, you only buy if the price is on a trend line and you have a quad rotation at the same time. So here you don't. Quad rotation and trend line. Well, maybe here, was it here? Maybe right down here there was something. But you understand what I'm saying here. We're going to actually wait for that quad and that trend line. And once you get that trend line, you want to take that trade right into the trend line. This didn't give us much, It got the rotation. Once that rotation gets back above 80, you could smell the fear. Actually, I'm looking at the overall markets too. This looks like it was in the middle of the night too. So we won't have that type of. We'll have better action during the regular market hours. So a good time to trade this. And again, I'm not going to pass these opportunities up here. Just saying, whenever we're looking at a market, and we start to see a downtrending market. Just something as simple as 3 pivots. 1 is the top pivot, 2, and then there'll be 1 up here, 2, 3. All right, you got to start to see those. They're very small. They're easy to see. The top pivot is always, the change between, these are all channels, all right? Everything that we do is the first thing we need to do is identify a channel. Once we start identifying channels, and it doesn't have to be a clean channel, it's just that once we start identifying channels, that tells us that when we get a break of a channel, that lower pivot area becomes probably our lower trend line. If we start to break out here. This was a quad rotation, right? This was a quad right here. So this would be considered a quad trend line. As long as it's a 1, 2, 3 pattern, you trade 4, 5, and 6. But 4, if you buy into that trend line on a quad rotation, that would be a viable trade. But as only if they were all 4 oversold here coming into it. So that's the only reason you would try not to get involved too much unless you did have that trend line or you had a divergence. So the first thing we had was the trend line. I want to make sure I understand what I'm talking about. So quad rotation, trend line, 1, 2 prongs. A strong downtrend, you must take profits on the 9-3 gets to 80. And again, what does that mean? One more time, I'll show you. You're in a strong downtrend. Here's a good strong downtrend in market. Let's see here. These are good. I mean, these are, even though this is at 8 o'clock in the morning, this is 8 o'clock. All right, so we had that up there. Now the market started coming back down. whenever we break to a top pivot area, so I could automatically start to see the top pivot is one, and this is a second pivot, and I'm waiting for my third. So right when I have two pivots on one side, what I want to do is I want to just drop that down there, extend it, and I want to take the other one. I want to take that line and make a parallel. I want to copy it. I guess I could have just did something else with it. Let me paste this here. Did we go over this one? We have that nice 1, 2, 3 channel. Usually that top pivot, once we break down from a smaller channel here, that's gonna usually be one of your pivots in the in your pattern. So, and again, it's okay to be an open-ended chart here. This is fine. You want to make sure you just, because this is all, this kind of just giving us, and it's okay to let them break down. A channel is meant sometimes to break down just so we can come back into it and retest it and then hold it, and then it really starts to hold up pretty good. So if you have something that's established trend line, and say you made it back here, I said, all right, I'll make my trend line. It looks pretty good. It keeps on hitting, but then we kind of flush through it. Keep it there. If it comes back above it and comes back and tags it, it's meant to be there. All right. These things you'll learn over time. And there are not too many rules. There's not too many rules. Again, here you have that. Sometimes you'll go back up here, just the back test, and do things like this. You don't know that, it looks like there could have been some news here. Or some Fed speak. It looks like 11 o'clock in the morning. Market drops off fast, and then we break down through a trend line, which if we look at this area here, it could have been a small little channel line here, and you could see that we dropped through it and came right back and then tagged it to the, so that happens a lot in the market. It happens a lot. And if you could, know where your trend lines are, that's okay for a trend line to break. That sometimes there are stop runs, there's news, there's program trades, and you'll get light volume, and it'll just flush out, and then it'll come right back up. And it's typically some kind of news, some kind of comments out there that get picked up, and then market reacts on it. But the key is, the real key is watching when a trend line breaks, when it comes back into that channel line and then retests it. That's the best. That's always the best area. So always keep your original trend line, even if it breaks. Don't adjust it. Don't adjust that down here and say, oh, now it's a new trend line and stuff. Keep the original one. You'll find that it comes back into play, and then we held it here, and then we held it here, and finally we kind of got overbought and then fell off. But as you can see, right when you fall off, that's automatically a pivot. And then you had a small little pivot here. And you can probably just drop that down. And then what I usually do, if I get that 1, 2 pivot, and we have this little 3 here, I'll just put a parallel line in there, and then we'll watch it, And if it comes down to 4, 5, and 6, as long as we're in, this is perfect. This is exactly what we're looking for. We're looking for the tightness of the channel. We have a low in the channel, and we have a low on the stochastics. Now, this is not including the divergence, quad rotation. This looks like a pure divergence. So we're looking at that 9-3. And it's borderline too. I mean, it is right on that 20 line. I'd like to see it hold above that 20 line personally, but that's an obvious steep divergence. And when we talk about steep, it's usually between that first low, which is the low on the price, and then there's a little bounce, and then we come down a little lower, and that higher low, and that line that connects the low to the higher low. However steep that is, if that's steep, bigger angle, like anything above 10, 20 degrees is really good. If it's down here like 5, 4 degrees, it's not a very good, you don't want to take that. So I usually use like anything above 10 degrees is great. Doesn't tell you right here how many degrees it is, but some programs will give you that. This is also what we call a quad rotation divergence. So this would be a valid trade because it's a quad and it's a divergence. And that's probably something I would take because it's such a steep divergence, and it's a nice inside of a channel, and it's just a nice setup there. And look at the nice move it got. All right, and then the market kind of got, we got that move up here, and the hardest part is identifying where you're going to take that trade off. But if you have a divergence, we're marking them out right here. We're just marching down this. This would be a trade. Now, you're going to make money on this. because you're going to see it here before it breaks out. And all these channels, you want to be in it because you want to be able to get the breakout of the channel. And that usually starts a new channel. And that little channel, it doesn't have to be a big channel. You know, we just have just something new until we find the end of that. And then we go somewhere else. And then, you know, so we're always chasing the channel because these channels are where the pivot's going to be. Here, on top, a little high, higher high, high, lower high, underneath the 80. Qualifying sell side divergence right there. Perfect on the top part of a channel line. It represents our pivot in the bigger picture, and then the drop. And the market continues to do its thing. So as we continue to do, now pretend we're here, and the market's just opened up or whatever we're doing here. If I start to see this, I'll say, all right, I have a pretty steep line here. I'm going to throw a line in there and just kind of extend it out right now. We're going to watch it. All right, and then we'll watch the market here. So we kind of popped through that. That's the end of the day. Doesn't help. Not much going on there. All right, we'll catch up to the market, open it up. Opens up, and then we come down, and this is a nice low here. And you can see the there's a nice little top trend line there, a nice perfect, that's the perfect channel. This is what we look for. This is what I call the environment. Now, here we have a situation where we're only looking for certain things with the quad rotation, but I want to just talk about this. When you're inside of a channel heading down, well, the rules still apply, but they're opposite. So if our 60-10 is embedded to the downside, we're going to be shorting every rotation up. But also if it is actually pushing down and on the way down, especially if it's under 50 and heading down. I would even say under 60. As long as it's heading down, typically we let this play out. So you're going to get, this is moving down, but this is rotating back up. So we get what's happening here is the price is kind of rotating back up. The bigger picture, this is rotating down. That represents the bigger channel, and this is the small channels inside. The 9-3 is considered the small channel right here. And that's the 9-3. And then you have the 9-3 go down. See, everything in nature is aligned perfect. I know that people like the Fibonacci's and stuff, but I love lines, straight lines, angles, you know. And each one of these on the 9-3 really represents that small angle, where the 60-10 from up here to down here represents from up here to down here until we got oversold. And then look at this. We have a low and a lower low. Now, we have a lower candle here, and it's probably just a closing price, which is just as good because it's such a high level divergence. A high level divergence means that angle is so steep. It's much higher than the 20 line, and it's duplicated itself on the 14.3, and even the 44 you could reach around and kind of like make that one a divergence still. And it's a quad rotation, so that's a very powerful move. That's something where you want to take your position and be in it much more aggressively, bigger. And this is at nighttime too. That's pretty good. And that, again, the only reason we're taking a trade here is because it qualifies. And what's the qualification? Well, first of all, on the quad rotation, we have a quad rotation divergence. That's an automatic take that right there. But we also have the lower trend line. You might even have a reversal candle. I'll do another video on the reversal candles. But you have everything here lined. This is this is a quintessential buy zone right here. You know, right here. I mean, it's just perfect. It doesn't get better than that, and it just shows you. That's why you need to be in there. And now, you know, we're going to continue to look at this market. All right, let's see what we have here. Now we have kind of a weird thing going on here. This is overnight. We have this move down here on the 60-10. Remember, if that 60-10 is moving down, that's typical of the bigger trend. So we have that bigger trend going down here. I'll try to keep that like that, and then we'll probably put this one like this. All right, and we're inside that channel line. Sorry for my lack of stuff. Now I'm rebuilding things right here. Just looking back at this, and I do notice what we call a running divergence here is where we have a series of higher highs and lower highs on the price here. So we have a, well, actually it's not a divergence. From here to here, from here low, no, it's not. It's actually not. It's fine. It's a good divergence here. It's a low here, a higher low there, higher low here, a low and a lower low. That was actually, it is kind of a good divergence there. And it's a quad rotation. So I would consider this a quad divergence right here. And that's a trade. That's a trade. So maybe you have 1, 2, market's doing its thing, and we're waiting for it to to pop up and kind of give us a signal. Now, and sometimes that signal will come in the middle of the night. It'll come, at any point. Small little divergences. You had a small stuff. You had a little small divergence here. It didn't do much. It went up. It came back, gave another divergence here. From here to here, that's an important one. That's kind of right on that line. And it had a nice little move here. But are you going to be in front of the computer there at 12 o'clock at midnight? That's some of these things we're going to, you got to be there for that. But when they have a good setup, that quad rotation. And again, we're just marking off quad rotations here. If we just mark off, there's a quad rotation here, it all gets oversold. The quad rotation, you want to match that up with either divergence, and again, we'll go back to that one more, kind of all over. So we talked about the trend line and the quad rotation, the divergence and the quad rotation. It's the super signal, basically. So the divergence is basically what we've been showing you that. It's just a regular divergence on the 9-3, even though, but the quad rotation is oversold. So it's any type of, when we're oversold on the quads, but then we have a 9-3 divergence. That's called a quad divergence, and that's the most powerful of all our setups. And if you get one of those, you should be aggressively trading it. Now here's, again, I put that yellow line in here so we can make sure that we abide by our rule. And what's the rule? We don't take it unless we have a low and a higher low. Now even that one right there, that's something, it's a high level, a nice lower low on the price, a higher low on the price, but it's underneath the yellow line there, just a touch. So again, at one point you gotta maybe, I don't know, where's that line going to stand? Is it going to be a mathematical visual divergence, a high angle, or do you want to stick to the 20 line and just kind of use that? You hate looking back at that and said, oh, I should have took that. That was right on the borderline, I think those are things that you just can't. You're going to have that. It's going to be part of the business plan. In this case, you can see that our stochastics, we've never really got back down here. We've been hanging up here for, pretty decent, just kind of move up, and never really rotating down. So a lot of times, if you've been up there for an hour or two, maybe even 3 hours, and just a good rally, a lot of times that first rotation down is a good bounce. So finally, after all this time, this was at 3:30, all the way till about, what time is that? 9:30. We came down, and right here we got into a quad rotation right here. Right there, you can see that spot, right? Right there somewhere. And that was our first thing. So that's another thing to do. If the first rotation after a long embedded stochastic is usually a good reactionary trade zone. And again, if we are looking at every trade, and not you're going to be able to do this, the first thing we want to identify is the channel. And I'll probably put that out there a little bit more. In the beginning, I probably put that there like that, because I identify these channels, and sometimes they get through there. Sometimes you'll get through there, but a lot of times you'll come back and then you'll hold it, and then finally, when you get the divergence inside or the quad rotation. In this case, we had that quad rotation. What else do we have? Oh, that was just the first, again, if you have that first, after being embedded for a long time, that first move down, that first decent pullback will represent that first 60-10 pullback. That's going to be our first decent pullback. And again, lots of times we'll get that bounce off of that. Each one of those bounces have come back down into a quad zone, and it's given us little bounces, not much. I'm just so adamant about making sure at least you have that quad rotation. Here's a quad, but is there anything else there? So you have a quad there, and you could get a little bounce here. You did get a little bounce. I'm not saying that guaranteed, but I wouldn't take. I probably wouldn't have taken that. There was a little support line here, gold line, whatever that was. Yesterday's open and close. That sometimes comes into play, but it did have a quad there. And what happened was we got that fast rotation up to 80, and then it kind of dropped off again. So even if you do take a quad, remember, in a downtrending market and you're underneath the 200-period moving average, you take. I just read that rule to you. In a downtrending market, here we have. I'm just going to throw those 3 pivots in here. Right when I have this pivot here like this, I see you pivots. So we have that nice 1, 2, 3. Once we have that, then we start looking for a trade down here, looking for divergences and stuff. But even as we continue to look at this sticking down here, if this is underneath 20, every time this gets 9.3 gets above 80, and this is holding under 20, and the price is underneath 20 or trading around the 20, not higher than the 50, that could be a short. That's a short right there. So this is a short, and usually it's it actually kind of dropped off quickly, but came back up and then had a major pivot there. It got oversold again, but it never really moved on the 60-10, and then it kind of dropped off. But now as we went down here, as we get down here, this is where we start to, now we have a recognizable pattern, and we have our lower trend line. So once we start getting down, this is where most of our trades will happen, off of this lower trend line by either a quad or a divergence. In this case, it's a huge divergence. It's a huge divergence. It's a low and a lower low, and then it's a lot of chop here, but we're looking at the closing prices. Now, would this be considered one? This is kind of that little higher rotation there, and that kind of closing price there. Very close. I mean, I probably would have, probably gotten a little out of this. But as you turn back up here and you actually start to see the 44, which doesn't happen too often when you have a 44 divergence, that's just something you have to always pay attention to. That's a big move. Now, I wrote down some rules here. If I could show you today's market or Friday's market. All right, so market broke down. This is an issue with the quad rotation. Sometimes why to ask people not to take the quad rotation, because if you have a nice rotation in the market's doing what it's doing, and for some reason there's news out, or there's a technical breakdown, and all of a sudden they just turned it on. In this case, it was a Friday. It was options expiration. I think there was some news, but we broke down through some major levels and started selling off. When we start to see that sell-off, and we're kind of stuck down here, and actually, right, whenever you're in a commandment, thou shalt only take a short if the 60-10 is embedded under 20 and the 9.3 is at approximately 80 and the price is under the 20. So the shorts that come into play, this is, when you're in this downward channel line, I'm trying to just kind of, I don't have it all mapped out for us. I do this. But I'm just going to say that we're kind of just looking at this bigger pattern. I don't even know where that goes. It's probably somewhere around there. We kind of have this going in and out, back and forth. And we extend this out now. I don't know if I can copy that or extend that. Now look at that. We came right down to that, right? I didn't know that. And we kind of got a big reversal candle off of that. So if we had this this channel line here, and again, you're itching for a trade. You have a 1, 2, 3 channel. I'm trying to probably, guesstimate it about there. Sometimes you could break through it and you come back and test, and I use the test area. We came right down to it and then bounced off. Now, if you bought into that, which requires you, saying, all right, we have a quad, check. So everything's under 20, and we have a lower trend line, check. Now, I mean, that was a good area, but it didn't give us anything too exciting. You actually start to see this thing rotate back up, but it's nothing. What time is it? 2 o'clock. This is very bearish overall. The overall 2 o'clock trade. Remember, we had 2 o'clock at the lows. But as you can see, if you are going to take that trade and you're going to look for some support, it typically happens on the trend line and the quad rotation. Now, if this starts to get overbought again, then things start to turn. You had almost a quad there to the downside. Well, this is the end of the day, too. So that's why, sorry about that. That wasn't a really good example here because it probably would have continued. But we did have the end of the day. That was the end of the day. Now you see, all our longs are based off the lower trend line. We want to wait for that quad rotation to set up and make sure that the quad rotation line is not by itself. That it's either with one of these. It's either with a channel or trend line. It's either with a divergence. I didn't mention the VWAP. We'll look at that in reversal candle. We didn't really mention the reversal candle. The reversal candle and the VWAP. The VWAP's not on here. Let me see if I can bring it up on my other chart. We'll bring it up on the other chart here. All right, we'll bring up the... All right. All right, the VWAP is this pink line, but you can see the market really sold off hard on the Friday, and you can actually see my chart. We actually had this channel line pretty established right down there. That's pretty cool. I already had that in. All right, so here's our salmon color line, and this is our VWAP line. Let me get this up for you. I'll explain a little bit more. All right, the VWAP starts fresh each day, so you can see actually how it reset here at around 6 o'clock. All right, and then it stands for volume weighted average price, and it's a technical indicator that just measures the average price over the period that it's being measured. In this case, a day. So it just kind of measures the average price on that, follows the moving average. And, the market here, when we talk about certain indicators that are kind of universal, the VWAP is definitely one of them. A lot of people see that. They'll know what Fibonacci's are because it's very easy to figure those out. Moving averages, 200 period moving average, 50, whatever, very easy to, and the same thing with the VWAP. There's a mathematical formula. And, maybe a self-fulfilling prophecy. But you can see how well it kind of attracts the average. The market moves up to it and comes back, up to it, back, bounces off of it. So we use that a lot of times to complement our trades. If we're up against the VWAP and you're overbought on a quad rotation, well, in this case, it wasn't just a 9-3 overbought. 9-3 overbought. And this is different altogether. But that's what the VWAP is, and we'd like to, trade that. And I like that trade best usually in the morning, after the market opens about 9:30, wherever that VWAP is. In this case, we never got to see it because Friday it was a horror show, and it never even got through near the VWAP. But normally, if we get a first bounce up to it, I like that trade, and if we're way above it and we come down to it, I'm trying to see if we have any good examples of the morning. I just want to get to the morning price here. Just kind of show you the example. All right, here's the morning, 950. It's kind of underneath this here. So this is the kind of our first test of it. and it was a quad rotation VWAP. Now, it did go through the VWAP here a bit, and we tend to see that a lot because it becomes such an obvious level that so many people are looking at. It kind of adjusts over time. It's like, the origin of species or some evolution. No longer is it, it clears out some of the area around it, but it tends to kind of gravitate towards that, like the 200 period moving average or the 20 and 50. A lot of algorithms run on this. But yeah, in this case, it's not a perfect, it's not a perfect touch, but as you can see how we did come up to it and we reacted from it, and we came down to it, and what happened? We reacted to it, and this would be a buy. This would be a buy right here. And why is that? Because we have a quad rotation, and this is kind of right on the 20 line. It's kind of right on the 20 line. I would count that just because the VWAP is such a big area. So that's the only reason I would take that trade. All right, now here's a quad rotation here, and oops, what happened there? I don't know how to get rid of this. All right. Anyway, kind of had a nice quad there, and that was at 12:30. Nice pullback. Again, you can see the channel. Once we establish that channel right here, 1, 2, 3, you had 4, 5, and then you had a low, and the low, it wasn't, we can't call that a divergence, but you were inside the channel, and you did have a quad rotation. So usually a breakout of a channel happens with a quad rotation or a divergence. The only reason I would take that trade is because the channel looks good. We're on a 200 period moving average, and we have a quad rotation. That's a pretty decent trade. It's very close to being a divergence. Mathematically, it's a divergence. You see my angles? You can see those on this chart, the Medved trader. I have a 9 degree. I said typically I like my angle to be above 10 degrees. This is about 7, 8 degrees, and it's underneath the 20 line, so I put a little less, but it is what it is. And that's a quad rotation, a little divergence there, and that's that nice little move back. And this was what we call a quad rotation VWAP. So again, going back to our understanding of what we're waiting for and why are we waiting for certain levels. We have the channel line, easy. Divergence, easy. VWAP, now reversal candles last. Now the reversal candles, I call that kind of a wild card, because that could show up as a quad rotation. They could show up as a divergence. A lot of these candles here, this candle right here is an engulfing pattern, or actually it's kind of an outside day between the other one out. I like that candle a lot. It's where the candle, the low is lower than the previous candle's low, and the high is higher than the previous candle's high. That's a very important reversal candle. All right. Very important. Now that's, that would be a trigger. So we have a couple different things happening here. We have the quad rotation. You have the possible visual divergence here, mathematical divergence. You have that there, and you have the channel. So you have a lot of reasons to go. Have this the lineup here that just makes a lot of sense there. Now you get scared sometimes because you see that VWAP there and it says, "Oh, we're going to come down to the VWAP." And just saying that to yourself and realizing that you're already hooked and they already got you, because it's going to just run away because so many people are waiting for it. It's just going to take off, and then it's just, another, the market's not perfect. What's perfect, divergences are perfect. Take the divergence over everything, take it. Don't get scared of the divergence setup. The, nice little downtrending market here on the NQ right here. Beautiful, right? 1, 2, 3, market just opened. And what do we see down here? A higher rotation on the 9-3 and on the 14-3. So very good, just a dual stochastic divergence here inside of a channel. So it qualifies for everything we need to qualify with. It's inside the channel. We have a divergence, and it's a quad rotation. That's considered a super signal. That's considered a super signal when you have a quad rotation and a divergence. Not to mention everything else is perfect on it. And that's what we wait for. So here you had a perfect setup, no reason to get into anything else until then. Here maybe you had a quad rotation VWAP if you wanted to take that playbook trade. Here we had a recognizable channel, quad rotation, possible divergence. I think that's doable. Quad rotation, sell side, VWAP. And again, are you going to be able to maybe trade 5-6 times? Because you're going to be trying to say, oh, I think there's a divergence here and stuff. You have to be true to it. And sell side and short side and long side, big difference. Big difference. You want to wait for that lesson. There's a lot of other things that you have to, I'd rather you identify the setups, get really good, develop your discipline, develop your patience, make a good diary of your trade workbook, get a business plan together, identifying what you're going to trade. And, when you get it all organized, it's so much easier. If you have it written down and you just have it in front of you, like I do, this is what I do. And you guys have this. I'm welcome. I give this to all the members. So this is just, I'm adding this to it because I'm actually redoing the courses too. All right. Oh, that's something different. There's a lot of stuff on here. Let me see. This is my thing on flags, though. This is actually a course on flags. All right, let's see if I could do. Oh, here's my business plan. I wonder if it's still there. Where'd it go? All right, flag business plan. I don't think this is it. No. I have a better one than this. This was one of my beginning ones. I'll wrap up the video a bit here just because, I go over the same thing because the most important thing is what's the obvious. The obvious is the divergence setup. Any way you could get to it is the best. That would be just ideal, is to make sure you don't miss it. And that's what we base a lot of, my trading day based on, is identifying this, making sure we don't miss any of these. The important thing is the channel recognition. If I could look at one thing, let me get rid of half of these things. What's going on here? Sorry about that. My thing is freezing up here a bit. You have the identifiable channel, and again, I'm just going out here. Look at that. Low, lower, low. Right here, low, lower, low, low, higher, low. One thing you could do is put that yellow line in here. Put that yellow line in here. Make it more noticeable so you respect it. So important. The better the setup. Let's see if we can get that down there a little. Come on. So now I can look at this and I can say, here's a low. Oh, actually, I didn't look at left. Here's a low and there's a higher low. Here's a low, here's a higher low. Here's your channel. There's your pivot. That's your entry. Here's your low. Here's your low. Here's your lower low. Here's your higher low. And in this case, actually, it's a running divergence. It's something very powerful. running divergence. When you have two higher lows, and this actually comes down, retests the low there, but this was a higher rotation. Just a good, the market has a way of shaking a lot of people out. Even if you got in here and it came back down, there's a shot it could just mess with you. This is a fast pop. This is a nice move, but then it's the fast drop, and then it's a pop. So that's a difficult trade there. So one of the puzzles is, how do we trade these? Well, in this type of trading, I have to commit myself to being a sniper. All right, and I use that term that we're taking that one good shot, we're getting as much as we can, and we're taking it off real fast. We wait for our setup, we ambush it, we get our pop. If the worst case scenario, I always say, get your 9.3 above. Once your 9.3 gets above 80, you should be selling that, especially if the price is still underneath the 20. Especially in a downtrending market. So you probably would have been out there. Now, if this came back down here and then had a nice double bottom and a higher rotation, I would be right back in there, because I know how powerful this is. I would be right back in there. So it's the sniper, divergence, get your pop, get your rotation, maybe take the majority off, take 90% of your contracts off. Say you have 5, take 4 off. Leave 1 at break even, or if it's a nice if it's a quad rotation divergence, maybe even leave 1 at the lows. One point you're going to make most of your money on being right on a big trade. All right, and this probably was the low. A lot of times we'll get a quad rotation divergence, running divergence will be a major low, and hey, when you can continue to show that over and over again, show what? Show our positions, our entries, our quad rotation, our combinations have this showed the perfect entries in this market. Now, what can we do between 12 o'clock and 3 o'clock when the market's just kind of running away here? Well, there's other things that we'd like to pay attention to, and trade these trends. So there's just other trades we call HPS trades. And I'm not going to talk about the flag here, but this is whenever you have your 60 stochastic embedded up here, and pushing higher, but really embedded up here. That's really a sign of strength. You buy every rotation back down under 20. So here you would buy right here. This would be a perfect buy area, right on the 20 period moving average. It's called the 2020 bull flag. And it's just a small pullback to the 20 period moving average before it takes off. And that was one. And then there was actually probably one here. Once it closes back over the 20, you want to take that trade. All right, as long as this is pointing higher and pushing higher. Now you should be able to see that. You'll be able to see where it is. It'll go from 77 to maybe 80 or 83. And you have the channel and you're holding the 20, and this gets down to 80, you want to actually get in that trade. So these are, this only happens in a strong trending market, and it's very easy to trade because look at how our oscillator, look at these stochastics, how easy it is to see that pullback. And this is embedded up here. Beautiful, beautiful setup there. Beautiful. And again, it has to be an uptrend, and this has to be, definitely above 80. I prefer above 90. When that thing gets above 90, then you really got a strong trend. And any type of rotation you need to be buying, especially if it's above 90. That's easy money. Easy money. Great for prop trading here. Here is something that we haven't talked about. I'll leave this as a bonus because there's always something to learn. This is what we call a coil. Now, a coil is a series of lower highs as a underlying channel. As you can see, there is a channel here. So when you see a coil, normally you get the rotation up and down and up and down. But if you have a rotation that seems to kind of coil down, like comes down, then it makes a lower high, and then another lower high, and a lower high, and then a lower high, and gets kind of coiled up. We call it, like a coiled spring. And this is all kind of waiting for this to kind of get oversold. And what happens is, this is actually something that doesn't happen all the time, so it's very easy to spot. And a coil that forms is a great timing tool from what the channel that the coil is channeled in. Lots of times you'll see, we'll go back to the top of the coil, or top of the channel. you'll see that's where the top of the coil was. And as we go down, we stay inside the channel until we get so compressed here that we have to move higher because there's a trend line here. There's a trend line on the stochastics. That is what I use for my trigger. All right, so it has to be after 4 rotations down. On the 5th rotation, we typically got the break of the channel line, and when the coil breaks out, that's when the channel line breaks out. And that's a rare. That's looking at a white deer right there, not a white-tailed deer, but a albino buffalo right there. That's a great timing tool because it tells us, like, all right, we got past 4. It's gonna explode in a few minutes. Now this actually closed out. This actually did pop, but then that just happened to be at the end of the day. But these, this is over time. It's like you could recognize our quad rotations, our divergences, our coils, our flags, our 2020 flags. Keep this, keep all these setups in your playbook, and then just let them come to you, because at one point you're going to see a great one. And when I say great, what is a great one? Well, an obvious 44 and a 60-10. Those are the biggest divergences. When you have that low, there's one right here, actually. You have a low underneath the 20 line, a higher low above the 20 line, but a lower low on the price on the 60-10. That is usually a much bigger move. Look at the size of the channel here, too. So that's actually one. You see how fast I can spot that? It's the same thing. Same thing. We have the... I'm still recording this. Yeah. We have the recognizable channel, 1, 2, 3, or 1 up here. 2, usually 1, 2, 3. You have 2 here, 2 trend lines here. Closing price usually. I usually try to time it. And then I take that parallel line, and I'll drop it to the low part of the pivot in between the 2 top pivots. So I'll drop it right there, and usually at the closing price. Not really too concerned about how neat it is, but I want to get a general, excuse me, like a general indication of when we're down at the lower trend lines. Now, if we happen to get a 60-10, that is a huge setup. That's where you're going to make a lot of money, And this is even at night, too. So that's a really good set. That's like a layup. That's a softball pitch right there. Look at that. 5-minute divergence was the low. It was the low. If we go all the way out here, that was the low until, look at that. I went all the way up. That was the low. And it was a lower trend line, and it was the higher rotation. So, again, proof is in the pudding. Is right here in front of us. All right? We just got to continue to find these. There's not much else that has to be tuned in. What needs to be tuned in is patience and understanding that there's probably the best way of trading out there, but the market is so tempting that it's going to cause you to try to trade outside what's obvious. When you have a great divergence like this, and you see the big move in that recognizable 1, 2, 3 channel, and Johnny keeps on showing it to you, and he shows it to you, and you have to put your yellow lines in, and you have to be understanding of it, and you can't be gambling, you can't be messing around if you want to be successful. I mean, you want to mess around, you can mess around. You know what they say. But, that's okay. Get a profit count, mess around, and gamble with it. That's fine. But when you get serious and you want to make money, you want to be good at something, you have to have the discipline of a professional athlete. You have to have the patience of something that's so hard to do, waiting for your cards to be played. So every pullback, this is beautiful. And the market will give you this opportunity. Any type of pullback like this is usually great for divergences. This is almost a closing price divergence too. It was very close. So I can recognize these. So you'll start to see when your stochastics are holding up and they're starting to turn up here, and this came down. This is actually a slight divergence too. Probably could have counted that as a divergence. All right. But it's not that hard to wait for them. And if they don't see them, that's fine. But you're going to be like, oh, let me get in here. Maybe we're going to go higher. But no, why are you going in higher when there's a sell side divergence right there? And then what are you going to do about this? Well, John, you have a rule here, right? Yes. Sell side divergences. This is another lesson altogether, but I'll tell you, I talked about this on Friday. When you have a sell side divergence in a very bullish market and you're embedded stochastics, this is a fast rotation. Look at this fast rotation here. That is a bull flag. Even though we had a sell divergence here, it did give us a breakdown to the 50. It did. That's fine. It worked perfect because it got oversold. But this stayed really strong, and it wasn't above 80. But it's right when it started turning back up, when we closed right around the 20, you're going to see that. And I have a rule. What defeats a sell side divergence? A bull flag. Meaning, if you have a sell side divergence with a high and a higher high and a higher and a lower high, and this rotation comes back under 20, and this holds above 80 or starts to turn back up, and the price holds above the 20 or closes back above the 20, you want to be long there. And again, every flag is a channel. So the channel rule still applies. It's a 1, 2, 3 channel. You want to be able to get that trade inside the channel. You have these nice pullbacks. Whenever you have a pullback, you put that channel line in. You start to concentrate on the bottom channel here. You say, well, do we have anything? No, we did not have anything. Maybe we don't even take that. It gets away. It's okay, because there will be better setups out there. There will be great setups for you. You will have the opportunities, all right? You will. And you'll gain confidence. And then you'll be having your prop accounts, and you can connect them together, and then you could, do everything that you need to do. But it's going to be up to you. I could show you the setups. I send out the alerts with the setups. Don't forget to check that out in the links. And that way that at least you're in front of the computer when I think a setup is coming up. I think it's the greatest service ever. It's called Future Trade Alert Network. And it's on the Voxer alert, and it comes across your phone, and I just talk into it and say, oh, it is 1600 hours. The market just opened up. We open up into a quad rotation divergence here. We're going to take a long here at 22,385 with a stop at this, and then it goes right out to you like a walkie-talkie. Man, I'm excited for Monday. So this is kind of a little review of the quad rotation. I kind of went off topic. I was all over the place. But it was supposed to be about the quad rotation and how important, and not to just take every quad rotation, but make sure you have the quad rotation lined up with something else, at least a lower trend line. A lower trend line, and what do you mean by that, John? Well, that's you're going to have to take that bird's eye view. Here it's very obvious to see that there was a channel here, right? Obvious after the fact, obvious. Up here, and then we broke down. Whenever we break down, we have a new pivot. That's always the high pivot. And lots of times that lower pivot is our bottom pivot before the breakout. But this top pivot is obvious. That's an obvious pivot. And then we kind of got a bounce there, and we broke down. So right when I start to see that, I'll probably end up starting doing this, and I'll probably extend that out like that, just for the heck of it. And then I'll take a parallel trend line here, and you could actually see that lines up perfect here, and then we came down here, and then probably in this zone here, this is probably something that you want to take. If not here, this is actually a little divergence here. You might actually take that trade there. This is actually a divergence. It's a little divergence, quad divergence here, and it got a nice little pop. And the rule is, inside the downtrending market, if you get over the 80 mark, you should be taking profits. So you should be taking profits on that, even if it gave you 2 ticks. I don't care. Maybe you got a late entry, because there's always going to be a new setup. But if you're in a downtrending market and you get overbought, you're going to be, you're going to probably fight that. You don't want to. This wasn't a great breakout divergence here. It was probably borderline. It was quadded up, and at some points, you're going to see that if you look back at the history of that 9.3, and you see 9.3 overbought, every bounce overbought and sold off, overbought, sold off. eventually you're going to look back at that. If it's been you're inside that channel, you're going to do what that channel is telling you to do. When you have a divergence inside the channel, that's when we're probably going to get that breakout. And again, what's the important thing? The important thing is that yellow line. One low underneath it, one higher low above it. If you're going to search out something, maybe, but, let's do it the right time. Let's make sure everything else is correct, not into news, not into a dead part of the market, not into Fed speak. All these things are little traps that are waiting for you. When you have news comes out, this was probably like some kind of tech news, Google or Amazon or something, and that just affects the market, and it came right by Microsoft. So again, you got to know when to trade. It sounds like a Kenny Rogers song. Lower low, higher low. There's your move as a sniper, and you're getting back above that 80 line, so you're going to be taking it off up here most likely. And maybe you got a few points on that. But the sniper comes in, and again, when you're knowing what we're looking for all the time, that whenever I have a low, and I start to see that push back up, I'm always looking for that fast little drop to put in the divergence. Always looking for that sneaky drop, higher low divergence setup. It happens so many times that any type of pullback like this, once I start to identify the pullback, I see one low, we start to see a bounce, and we come back real fast, and we have a second low. It wasn't a divergence, but you know what it was? It was a quad rotation trend line, which is a HPS setup. Remember, we only taken it on the 1, 2, 3 channels, divergences, VWAPs, and reversal candles. And this was a little engulfing pattern right there. And we didn't even talk about the sell side today. All right, that's going to be it. I want to send this on its way. We'll see you in the markets. Don't forget, check out the alerts, and we'll see you Monday. This is from the School of Stock educational courses that I put out, Day Trading Radio. Most of the memberships get all those courses. They're found on daytradingradio.com, along with the alerts and the live trading every single day, from 9 o'clock in the morning to 4 in the afternoon, and many times we trade after hours for the European session. Usually Tuesdays, Thursdays, and possibly another day during the week. Usually 2 to 3 times a week at weeknights. So hopefully we'll see you there. All right? Have a good one, everyone. Have a nice one.